Good afternoon. I'm Richard Swerdlow. I'm the founder and CEO of Condo.com and a founding partner in Bulk Condo Deals. I want to welcome everyone to the first Bulk Condo Deals webinar. We're going to discuss today how to move condo inventory in a distressed market. We really appreciate everyone who's joined today, and we're going to share really an inside perspective on the market, condo sales strategies, and recent activity. We developed the marketplace really as a wholesale channel for sellers, both developers and financial institutions, to confidentially post slow-moving and soon-to-be pre-sale inventory in bulk so that it doesn't negatively impact their existing retail sales channels and it doesn't alert the market to potential distress. Before we get started, I want to thank our panelists, Kevin Maloney, Fernando de Nuñez y Lugones, and Bruce Goldstein for taking their time today to join us and providing their insight on the market. Kevin is the managing partner of Property Markets Group. It's a leading condo developer with over 30 years of experience. They've built over 150 iconic projects with about $10 billion in real estate investment. Fernando is the executive vice president and chief economist of One Sotheby's International Realty. They're the leading luxury condo broker in South Florida, and with all of their recent acquisitions, likely in the state. And Bruce is a luxury condo and hotel developer and a partner and CEO of Bulk Condo Deals. So before we jump into the meat, maybe each of you can spend 1 or 2 minutes giving us a little bit of background and really what you're working on today. So let me start with Kevin, then we'll go Fernando, and then we'll finish up with Bruce. So Kevin, could you share a little bit of insight? Give a couple of minutes.
Okay, so we came out of the banking industry in '91, and also a very deep recessionary economy. We, mostly in New York City and Manhattan specifically, started buying multifamily when it was not that attractive in the marketplace and debt was scarce. We built that into probably an 80 building portfolio. Somewhere in the middle of the 90s, we started to build ground up construction. Also really just in the residential space. We don't really do commercial nor do we do retail. You know, in the mid to late 90s, we started converting. The company grew from 6-story buildings to 50-story buildings, as the condo space heated up, both in New York and in South Florida, we heavily participated in that marketplace. As that market has slowed down, we have sidestepped, and currently we're more in the residential rental space. But we are selectively in certain markets building new condominiums where there is demand or we perceive further demand.
Are there any markets besides Miami, New York, and Chicago that you're sort of looking at now?
Yeah, we're building in, we're finishing our 4th project in Denver. It's in the rental space. It's multifamily. We're just finishing our 1st project and beginning our 2nd in Phoenix, Arizona. We're building a project, I think it's on the table in Nashville. We are building in Atlanta, and obviously we're completing what we have in New York City. Chicago, we have 1 project left, and then in Florida, we're in Orlando, Fort Lauderdale. We're in Sarasota, Tampa, and maybe 4 or 5 projects in the Miami corridor.
Nice, thank you. Fernando, we'll pass it over to you. Can you give us sort of a little bit of background, tell us what's happening over at One Sotheby's and what you're seeing in the market?
Hi, how are you everyone? Thank you so much for inviting me to the panel, Rich, and it's nice to see you all guys. Well, originally from Argentina and France, I moved to the United States pretty much in 2003. I have been, before that, acting as an investment banker for pretty much 10 years and real estate for the last 17 years. I'm the executive vice president of One Sotheby's. I run the development division. We're currently representing about 15 projects, and the company has now over 20 offices and over 1,000 agents after the 5 acquisitions that you just mentioned earlier in the call. And yes, we are pretty much dominant on the development and the luxury market in general. And we're very excited to be part of the panel today.
Nice, thank you. You know, it's always interesting to me to know your background. It really on Wall Street as an investment banker combined with luxury sales. You really look at things from a sort of quantitative perspective and nice additional analysis. Bruce, can you give us a little background and share what you're up to?
Sure. I started as a broker many years ago in Minnesota, moved to Florida. Got into development I was a broker for only a couple of years, really full time. And then I got into development, but originally a small amount of retail, 3 campuses of senior housing. And then I got into the hotel development business. We were one of the very earliest developers and franchisees really of all suite hotels many years ago. That got me into the condominium development space and did that for many years. I've been partners with Kevin on a number of projects. Went to Singapore, went to the Far East for almost 7 years because we had a operating entity in Singapore. And so I was over there running that, came back here a couple of years ago and to Florida and living in Hollywood. And about almost a year ago, Richard and I talked about, even before COVID, because the market, as I'm sure you'll hear on this panel, the condominium market in Miami, for those of you who don't know, and I'm sure everybody knows, slowed down way before COVID. COVID was just the final straw, shall we say, in the Miami market. And so we talked about some way to expose the bulk condominium buyers to bulk deals in a confidential manner. That's really the secret to bulkcondodeals.com, is that it's confidential. We don't show pictures of projects, addresses, and so forth. We just give the bulk buyers an idea of what we have, what city, and how many units, and roughly the value. And then we try to put buyer and seller together. So that's what I've been working on with Richard, and getting a lot of traction. We have over 200 buyers now coming to the site. So we're very enthusiastic about what's happening in that sector. So
Great.
Happy to be here too, and hopefully can answer a couple of questions.
Thank you. So let's really, in order to start the conversation, I want to provide a little bit of framework and context. And Fernando, I know, is an economist, and he sort of put out a beautiful update on the market, I guess, last month. Talk to us a little bit about the numbers, Fernando. Can you tell us how many months of inventory is out in sort of the South Florida market, and really what's considered healthy supply, so we can understand what the market looks like from your perspective?
Yeah, of course. Right now, what's happening is something very interesting. Since the first quarter, the first 2 months of this year, the sales have been very significant, and we were expecting to have the best year in the last 5 years. As Bruce was mentioning, the condo market accelerated since July 2015 due to the appreciation of the dollar, that in a way we lost affordability with international markets, in a way that our, especially Miami-Dade, is very dependent on international sales. In 2015, international sales represented pretty much about 75% of the sales of the new construction inventory being done by international buyers, while last year was only 53%. So this number has been dropping as the cycle was ending. So what we have witnessed, yes, is a deceleration of international buyers. Condo sales absorption were dropping, and that would start easing up on the supply side. They start seeing a lower absorption, and in order to get to the pre-selling requirements, they needed more months that was reasonable if they were launching projects after 2018 and 19. So what we're seeing right now is that from the overall new development inventory from here to Palm Beach in the luxury markets, we have a little bit shy of 3,000 units for sale, which is a number. It's not a significant number, but it is a significant number, but not crazy. But we're seeing that some of these developers, they have been, the last tail of inventory has lasted a lot longer than they were expecting to at the very beginning. So having said that, we're seeing that the new development cycle might start in 2021 with the reopening of the Latin American markets. But today, the developers, some of them, they're trying to get rid of the last tail of inventory in order to start the new development cycle like from scratch. So that's pretty much what's going on. So the most important news for the market is that single family homes, the month of inventory has never been lower. Just to give you some framework, the lowest amount of single family homes were about 9,800 in 2008. Right now we're at 10,700. So we're almost at the lowest point since 2008. The peak was about 27,000. We're talking about luxury market. And then on the condominium side, the last quarter, the single family homes appreciated significantly. This on the market dropped, the number of inventory dropped, but the condos were a little bit more steady because of the pandemic, the people were shifting their consumer preferences towards less dense environments. So there is a little bit of a stigma that eventually during 2021, with the arrival of the vaccine and so on, we're going to see the people getting back to the condominium market. But this year has been a little bit more difficult to move this inventory.
Mm-hmm. Thank you. So to add to that question, you mentioned that a lot of the buyers historically in the luxury condo space were international buyers. So let me give it to Kevin. Kevin, in the past, you'd seen buyers from South America, China, Russia, with those markets sort of closing down for a variety of reasons, whether it's economic or political. Where do you see the next sort of round of absorption in the condo space coming from? If it's not from international buyers, is it domestic buyers? Where do you see that next round of buyers to buoy the market?
Yeah, so I don't have the exact dates that Fernando has, but obviously in real time we were building probably a couple of thousand units through 2010. This is what I call this cycle. 2010, we saw the market start to fall off really third quarter of 14. I know Fernando had talked about 15, early 15, but close enough. We were just fortunate enough to kind of sell through inventory. But we immediately, the dollar got very strong against real, against the peso. There's overbuilding. All the things you have in a small marketplace will, drive up supply and drive down price. I think that we immediately shifted our marketing focus to the domestic United States, obviously New York, New Jersey, Boston. We kind of started spending dollars trying to target that market, Canada, and buyers were, certainly back in, pre-COVID, the market was not that strong in that arena. But certainly, COVID has driven, as he referenced, the housing market or the suburban market. We call it some sort of deurbanization. Really started to pick up strongly, and now buyers from the Northeast we're really seeing the condo space start to pick up in South Florida from really the Northeast, and we're seeing people from Chicago. Indiana, we're seeing kind of those states coming down to Miami. We're seeing it very strong. The condo market, frankly, really never slowed down on the west coast of Florida in, Tampa, St. Pete, Sarasota, Naples. In fact, has been continuing to grow and escalate. So, but we really changed our focus from, really 50% of our buyer was in the day was really South America and Mexico. And of that, probably 70% was Brazil. And as the US dollar against the real got very, very strong and capital was tough to get out of the country, we saw a continued softening in the condo space. But that's really been replaced by the domestic buyer in Canada. And there still is some demand out of Mexico.
So a little bit of sort of moving from flight capital from foreign markets, really it's COVID capital coming from Chicago, New York, the Northeast to fill that void. Bruce, here's a question for you. What are you seeing in terms of distressed buildings? I mean, is there some large number of buildings that have, let's say, 20% or more of the units that are not selling over the past 6 months that you can identify either in Miami or New York? What's the size of the distress problem? And anyone can jump in.
Let me just say that we have 14 deals in our pipeline right now to be posted on our site. So we're working. For us to curate them, it takes a while because we need the data. Even though we don't disclose the data, we need it if the seller agrees to share that data with certain buyers. So it takes us a while. But the average number of units that we're being offered is closer to 40. So this doesn't mean they have only 40 units to sell. Some of the buildings we're working on have 120, 130 units to sell, but they're packaging up 30, 40, 50 units to test our marketplace. So that's kind of, we're seeing more and more deals come to us that we will post in the size of 30 and 40 units. So while I'm glad to hear Kevin has got some optimism there, especially I know on the West Coast has been very strong of Florida. And I'm glad to hear that there's activity in the Miami market. And Fernando was, I think, alluding to that as well. So hopefully with the vaccine and people starting to see possibly the end of this, the light at the end of the tunnel here, that the market will pick up. That being said, we're looking at more and more buildings that have just slowed down to a snail's pace. And so those are the deals we're seeing. So we're seeing more and more of them. We see a lot of them in New York. We're trying to curate some deals in New York. We have deals coming to us from around the world too. We have a deal going on our site from Australia, Chile, Costa Rica, Mexico, Toronto. And so there are other parts of the world that are hit even harder than us, where the markets have slowed down to practically nothing. And so we're getting a lot of international action as well, Richard. So
thank you.
A lot of activity.
So Fernando and then Kevin, have either of you actually worked on or closed a bulk transaction in the past 6 months? I mean, where the rubber meets the road. We're talking about bulk. We did a bunch of bulk deals on Condo.com during the last cycle, but in this sort of current environment, have either of you actually closed or are you working on bulk transactions right now?
So go ahead, Fernando, why don't you start?
No, yeah. So honestly, we had a few offers, but the offers came lower than the price that developers were willing to accept. We did have mini bulks, but of course the discounts are very different. We're talking about 3 to 7 units. Yeah, we had a couple of those, but nothing significant, and the discounts were not. So in a way, the supply and demand for the bulk deals they didn't cross in a way. But yeah, we have received offers, but unfortunately, not any of the big deals.
Kevin, you're seeing some stuff?
Yeah, so it's also mini bulk stuff. So, as developers even in strong markets, frankly, Richard, if you have developer inventory at the end of a sales period or through a sales cycle, and I've done it just about in every project where you have a half a dozen units left over and you have a bulk buyer comes in. Developer just wants to, turn the inventory into cash. It's a very common experience, but yes, if you can tie up 2 or 3 units, for us it's probably smaller, but we also call them mini bulk deals. We'll put together a handful of units to a buying entity and spin them out, and we have been successful in trading those.
And on those mini bulk deals, what type of discount to retail do you sort of provide, or your developers, Fernando, willing to provide on a mini bulk deal?
Honestly, the highest one has been 12%, but it has been between 5 and 12% discount. But for the large deals, we have received offers with minus 30%, and we will try to bridge the gap, and we couldn't make it work.
So I would say that if I were on the buying side of a bulk deal, I'd want to be 30% as a minimum. I don't think that, especially if it was a big enough bulk deal where I'd have to step into a sponsorship role, and there's inherent risk there. So I'd want to be paid for that. On the sales side, we are laying off mini bulk stuff. We're laying off, I don't know, 12 to 18% kind of stuff. And there's a lot of capital on the sidelines currently. It's very hungry, that's been waiting for either recession or a slowdown in this space. And so there's a lot of competition in the capital markets for this type of product. So, it's been, it's pretty relatively easy to wrap up a handful of units and kind of sell them out the back door.
And the buyer primarily looking to sort of hold and resell or to get rental income, based on what your condo docs permit? What's the investor looking at?
So it's usually a combination of both. Obviously, they want to mitigate, common charges and taxes. And
Mhm.
so there's a portion that will be rented. And even if they sell through the unrented portion, the seller is going to continue just to sell because the lease period's probably 12 to 24 months. So they're going to start to sell rented units
Mhm.
to an end user buyer. It really is 6 of one, half a dozen another. I don't know that it matters so much in the marketplace when you have short-term rental in a condominium. But usually the plan when people come in, they're going to rent a certain amount just to try and to mitigate costs as they go through the sales cycle.
Mhm.
But I don't know if holding condos long-term is ever a smart move in any marketplace.
Mhm. Mhm.
I mean, hoping for appreciation. I don't know if that's a
So-
good financial play.
Yeah.
It sounds like the delta, though, you're saying as a buyer, because you're on both sides, both the developer and a buyer looking at assets, you're looking at a 30% discount minimum. Fernando says his sellers maybe are budging at 8, 10, 12%. So how do you cross that divide and how do you get deals done in this market?
So, it depends what market you're in, the state of the developer, the state of the debt. Does he have mezz? How much up the cap stack is he financed?
Mhm.
When a developer's selling through just to retire debt for either a senior lender or senior in his mezz, or the developer probably is just speaking to his lender about selling through the project or bulk selling at a point where the bank will take the asset,
Mhm.
right? If provided there's no PG on the project. And so that in certain markets that's the case. Like, I mean, not to be to broad brush a whole market, but generally, if you're in the New York market and you're building in the last 6 years, chances are that you're probably not in today's condo market. I would say that you're probably, your equity is wiped and you're selling through for your bank and your lenders, right? In the Miami market, not so much. Maybe there's a little bit of margin there, and therefore the developer is trying to sell at a price point at a higher or less of a discount and a higher price point where there's some recovery to his principal as
Mhm.
well. Each bulk deal stands on its own, but I'm as you're looking into a bulk deal and you assume that you're going to, even at some price point wherever you establish that market, and you need some sort of margin. If you're trying to solve for IRRs in the high teens or the low 20s, and then you're looking at 10% in sales costs, you can start to understand where 30% is absolutely the bare minimum, assuming you're starting at a price point where that's the market, which might be 30% over where the top of the market is.
Mhm.
It's establishing where that market is today. So,
Mhm.
for me on that side, I'm happy to be in the bulk purchase business.
Mhm.
But I need the margins have to be there.
So I agree 100% with Kevin. We're seeing that developers have 3 moments during the lifespan of the project where they are more inclined to sell at discounts. One is at the very beginning when they're trying to reach the pre-seller requirement. The other one when they're very close to obtain the construction loan and they need just to speed up the construction in order to keep the promote as healthy as possible. And towards the end when they need to dispose inventory. So it could be or to repay the debt and or just to cash out and to move to the next venture. But we're seeing at the moment that is more critical. It is when they have a standing inventory, so they are already accruing with the payments of the HOA and property taxes, and they have a lender in place. And that's where they start feeling the heat. And that's where we're seeing more inclinations to accept deeper discounts.
Mhm. So, as Bruce mentioned, we've got, 200 plus investors that are sort of chomping at the bit, trying to find deals. Bruce, what are the main objections that you're seeing from developers in terms of posting deals? And how do you sort of, break it open? Because, we've all this cash sitting there looking to buy these assets. What's the problem? Why aren't developers posting faster?
Well, it's a question of a couple of things. One is how much stress do they have? Kevin mentioned it. How much stress is there? They have stress from the lender, from their mezz lender, So that's one of the things. That the issue is how much stress. If they have enough stress, our site makes sense to them immediately. The other thing is they need to believe, which we desperately try to get them to understand, is the confidentiality of the site. Nobody really wants people to be advertising that they're under stress and they need to sell in bulk. So it's important for us to explain properly to people that it is in fact a confidential site. Once they understand that it really is confidential, then we have to go back to the seller with each and every buyer. Say, are you willing to give access to your bulk sale to this buyer? When they believe that, then they list with us. So those are really the two issues. That's it.
Okay. I want to add on to something Fernando mentioned on the pre-sale. I mean, we primarily launched the marketplace to sell distress, but increasingly we've been approached by developers to help pre-sell so they can get their construction financing. Kevin, is that a practice that you've used to sort of pre-sell in bulk? And Fernando, is that something you're seeing being done by developers today? The sort of bulk up on the front end besides the selling the remaining units?
So from my perspective, we don't do that, but I can imagine people do it. You know, getting into the ground in Miami, unlike New York or just about any other condo market where you can use buyer deposits, and the structure used to be 50, 60% in the height of the market. Today, that doesn't exist. And you can lever those deposits or pledge them. It was very formulaic. You just needed to, from a development point of view, if you wanted to have a completely safe condo development, you had to pre-sell enough that when you took the difference between the 40% or 50%, for argument's sake, deposit and the other 50%, and you looked at your direct hard costs, and you could say, I've sold enough condos that I can completely pay back my debt lender, right? That was really the formula where it didn't matter if the developer got hit by a bus the next day. The condo would be done. There'd be a tender of a deed, and the buyer would have to close. That was the ultimate safe, boxed out solution for condo development. Developers, obviously, as more entered the market and it got more competitive and dollar got stronger and sales slowed down, deposits dropped, and developers were looking to, you know, every developer thought, well, I just need to get out of the ground, right? I'm going to get a pop in sales. I got to get those footings in, and those piles in, and I can start coming out of the ground, and people will know it's real, and I'll sell more, and on and on and on. So they started violating those kind of very simple rules about condo development, and then in that circumstance, they might wrap up and bulk sell to a. We used to do something called a DIK, which is a distribution in kind. Where we would sell, but very few, you know, one or two, where we would have people enter the partnership and take a distribution, which was a tax deferred vehicle to allow them to buy at cost or something below cost if they wanted to step in the partnership. But that was far and few between. Typically, we went into the marketplace, we followed those pretty clear rules. We're building a condo right now in Longboat Key, a small project that we launched several months ago, selling through it pretty well. But we won't break ground until we get to that sales threshold that allows us to meet that formulaic approach I just described. And so that's not for us to try and bulk things up and tie it up and sell it.
So in addition to our marketplace, where, you know, we think we're the first marketplace, it's going about aggregating bulk inventory. What other channels besides, you know, a sovereign wealth fund or a real estate fund calling the broker or calling you directly, are there other channels that you've seen that are successful to move the remaining units in a building? What do you see, or what do you know, Fernando? What do you see in that regard?
Go ahead, Fernando.
Honestly, there's not any other formal channel. What I love about the platform is the fact that does not conflict with the retail sales, and the fact that it's a parallel structure in the total different, in a way, demographics, investment channels, everything's different. So I feel that it's very appealing for a developer that needs to move some inventory. So no, formally, no, we have just received calls directly from the investment firms or family offices. What happened here in Florida, especially Miami, we have a lot of international family offices. They are the ones trying to get deals, and they are not as professionalized or institutionalized, where the discounts are a little bit more friendly for the developers, and of course the size is a lot smaller. We're not talking about 120 units, so that deserves a much higher discount, as Kevin was very well explaining, when you're assuming all the sponsorship responsibilities. No, so I feel that that's why we're getting more call directly from buyers, and some of them they're coming with co-brokers, and that does not facilitate things at all, because no one wants to talk about the discounts. The developers don't feel comfortable, the brokers getting information, so that's not working out very well.
Yeah. So from my perspective, just throw my 2 cents in. We look at probably a dozen fractured deals a week, at least, and we have probably hundreds of broker relationships throughout the country. Whether it's land or someone couldn't get launched, or they're partially built and they're out of balance, and they needed someone to come in with a balance sheet. We see those all the time. But in this website, it really, I think it affects the sellers more, and it's more beneficial for the sellers because they have one marketplace with one voice and one source of information, and to go to and look at this and buy from this site is a real benefit, as opposed to us culling through lots of calls, lots of meetings, lots of data, in hundreds of different locations, and trying to find the best deal to maybe to buy and to resume building or to begin building. So the idea of anytime you have, you're creating a more perfect market with this type of website.
No, we appreciate that. Appreciate the promotion. Yeah, I mean, interestingly, our value prop is we will deliver to the seller 30, 40 sort of NDAs, multiple tours in one fell swoop, instead of you fielding calls, like you said, from every broker that's got, a rich guy or a fund or someone in tow. So we appreciate that. When do you think we start to see new construction in the condo space? I know you're building a lot of rental. Do you see sort of new luxury product being built in 2021, or you think we push it out a couple more years?
Yeah, I think we have a little ways to go. I mean, listen, I like the fact, the COVID, there's a more demand, people moving into Florida. Florida's a really growth state. We're working in most of the growth states. I can't say that New York or New Jersey are growth states currently. I think you obviously got to eat up all the supply that's in the market, or you get enough supply in the marketplace that you start to see demand, shift the price curve. There has to be enough of a margin for people to re-enter, developers to re-enter the marketplace. Currently not there. I think, unlike, 2007, when we had 25,000 units on the market, and I would have been the first guy to tell you in 2007 that it was going to be a 10-year run, but in 3 years we ate up the inventory in Florida, and we're back in the marketplace again with growing pricing. Fernando said there's several thousand units in the marketplace, certainly on the east coast of Florida, south of Palm Beach or West Palm, so those got to get eaten up, but more importantly, the inputs here this time different. South America, you have massive economies and socio-political issues that really have to get solved. Argentina, Venezuela, Mexico to some extent. We've seen, flight capital leave those countries, mostly on the investment side, as people investing in our projects, but also on the buy side, because people, wealth in those countries that are watching those governments and GDP start to slow down significantly, and they're trying to move capital out. So, but all that I think really has to get cleaned up before you get a true new demand in our marketplace. So I think there's a little bit of a road to go, but again, I was very wrong the last time in 2007, so I hope to be wrong this time too.
So
Fernando, you want to add it to that?
So what we're seeing, because we're already in the business of acquiring listings, so we're in talk with developers, and I know when they will be launching. And our expectation 2021, we're going to see new projects hitting the market, because if we see pretty much the completion profile in the Brickell area, besides Smart Brickell, that's going to have 170 units coming next year, and Una in 2022 only 135 units, then there's no supply here in the market, not at all. So even if you launch a project tomorrow, you're not going to deliver until 2025, 26, because until most of these tall towers, especially when you have in Miami 21 type of zoning, it's in a way it's going to take a long time because you need the pre-selling period that is going to take minimum 9 to 18 months for any of the large towers. Then you need at least 40 months of construction. So it will take a long time until we really see the new supply here in the market. Downtown is a little bit different because you have projects like Hotel, Legacy, Nativo, even Aston Martin that will be being delivered, but none of the years will have more than 700 units here in the market. Nothing in comparison would happen in 2010, where we have 11,887 units delivered just in 1 year. That was crazy. During this cycle, the maximum units that were hitting in the 3-county area was less than 4,000 units. And luxury condominium, of course. I'm not talking about multifamily, it's a totally different monster. But so I think that next year, yes, we're going to see 2 types of projects here in the market. One, like a luxury boutique condominiums, where you have very niche-oriented projects in very consolidated areas, call it Coconut Grove, Key Biscayne, Boca. So they're very niche in nature, and so to hit the pre-sale requirement does not need to be a significant number and not so dependent on Latin America capital. That's one type of projects. And most of these projects will have 30% down in deposits. Otherwise, they will not attract the US domestic buyers. The US buyers, they're not used to 50% and not used to get a project being delivered in 5 years. That doesn't happen. So we need Latin America to reopen for any of these big projects here in the market. So that's the reality. So, and on the flip side, we're going to see some larger projects like what's happening in downtown, where the value proposition is to have some short-term rental, potential some use of the project, micro units, and the nominal price of the units to be less than $650,000. Why? Because if you have units that are larger than that, you're missing Chile, you're missing Ecuador, you're missing Peru, you're missing Colombia, we're missing most of Argentina, and you just have 2 markets to go. It's Brazil and Mexico. There's only 2 real markets where you can really get the 1.5 million plus type of units. So if you don't do, so I feel that it's going to be new supply here in the market, I know so, but it needs to be the right product. Otherwise, the developers could have a scary launching at the very beginning.
Great, thank you so much. By the way, my name is Paola Ayusba. I handle communications for bulk condo deals. We lost Rich, so he just called me and said, could you please step in? So it's not like he wanted to leave, he had to, but we're pretty much got past the 30 minutes that we had promised the audience. We wanna thank you so much for participating. And I just want to let you know that we are going to be editing the video and we're going to send it out. So to everybody who registered and the panelists, you can send it to your own sources. And we're going to continue to do this webcast. Thank you so much for informing real estate community about the state of the condo market and providing solutions. So to, what they can do with all the capital that they have and giving developers ideas on what they can do to turn inventory into cash. Thank you very much and happy holidays.
Paola, I'm back
Thank
too.
you.
I just want to,
Oh, wait a minute.
I got back. I just want to sign off. My Wi-Fi died. I apologize. I want to thank all the panelists. I want to thank the audience. As Paola said, sort of stay tuned for upcoming events from bulk condo deals. If you're not already registered, you can go to the site. The webinar has been recorded. If you want, you can access it again to get the contact information from Kevin, Fernando, Bruce, or myself. Again, really thank everybody for the time today. And until next time, thanks again.
Fernando and Kevin, thank you particularly for taking the time.
Appreciate it. Thanks, guys.
Thank you, everyone.
Thank you.